Hey everybody, happy Tuesday. Thanks for being here. More comments have come in on taking profits and a few other ones that get a lot of comments. Thanks so much. So let me just give a couple of shout outs. G Headwind, I appreciate you. Blaze in Trading Leprechaun, I see you. Thank you. Roman, appreciate it. Raj, thank you so much. I see all your comments. I appreciate it. I'm glad you're getting so much from the videos. SY2252, your stress on letting the winners run is great. I watch your videos and make notes, but when the action time comes, it all goes out of control. Matthew Buckingham, do those who don't use margin avoid high priced and slower stocks? No. They might use options on the higher price stocks. Another comment came in from something I had done years ago, how to exit winning trades after they go parabolic. G. Headwind said, very instructional, Michael, as I mentioned in one of the older videos. Too bad you stopped doing how-to masterpieces. Well, I do them, but it's in the premium content. I just figure it seems bass backwards to probably many of you because you're like, well, why don't you just do how-to trade diagrams, all that kind of trade review stuff. I, you know, my take is this: the emotional and the psychological is actually the hardest part of trading. The how-to part is the easiest. But if that's what you want, that's going to actually take me a lot more time in terms of preparation and otherwise. And so that goes into like the coaching stuff. So I don't want to cross my feet and not have a good base by getting into, these types of things here. Maybe once in a while, if I could do something, I wouldn't count on it though. So don't get your hopes up. I have a strict, they say good fences make good neighbors. So that speaks to boundaries, right? So I don't mind doing these trader psychology ones because, it's an area that I think I have a great deal of mastery in from, getting blasted, right? This didn't come from me just being born a certain way. I mean, I was, thank God, but I still had to go through a lot of the things that you're going through now. And I didn't have anybody to help me. And that's where I came up with the ethos that, I would help people. But in the training, we marry the trader psychology, the emotional constitution, emotional intelligence with the trading tactics. Because the trading tactics, if those were so helpful, you wouldn't be writing in saying that you needed help with that, right? Because everything that's said already has already been said. For whatever reason, it just hasn't caught up with you yet in your trading. I don't know why that is, but you know, it could be a lot of reasons. It's very difficult to speak, to that. So again, the one comment here was like, every time I take notes, from on the trades, but then every once in a while I go crazy, and I think that comes from you're watching the screen. I'm gonna guess 10 to 1 that the reason your rules go out the window when you're trying to let your winners run is you're trading your P&L. And you're so excited to be in a winning trade that you actually get panic, which is easy enough. I've been there, which is kind of weird, right? Why would you panic when you're making money, right? It seems counter emotional, right? You should panic when you're losing money and you can't see things clearly. But when you're making money, like I said yesterday, it's really just the beginning of the move. So you have to envision yourself, and this is going to help you a lot. I always envisioned myself making, 5, 10, 20% on a trade, meaning that's going to, again, when my account was smaller, I had to think deliberately that with my tiny 5K, that I would be taking $500 to $1,000 winners out of the trades. Now, the volatility, of course, is gigantic with that. But you have to understand, why do I care about making $100, 2% on a $5,000 account? If I take consistent small gains and marry that with my consistent small losses, what does that add up to? It adds up to me churning my own account, which you used to go to jail for. Now it's all delegated to you. You can do it online. You can do it to yourself. So every day you get up, you look at the markets, you're hoping to make big money. But the minute the market shows you that you're in the right neighborhood of making big money, you panic and you offset the trades. So to me, it also speaks that you might not have a very clear goal of what it is that you want your money to do for you. I knew with my overhead living in Manhattan, I had Manhattan rent and I had to pay back student loans, which are probably the worst investment, right? Using borrowed money to pay for an education. And that all comes from take-home pay with not a lot of tax benefit. You see, there's not a lot of write-off ability if you look at it that way. So what I would just reiterate for those of you who are struggling in the gains part, stop looking at the screen. You're not in control. Why would you be looking at the screen looking for information when you have zero training on how to interpret that information? All you can see is it going up or it's going down. A fourth grader could tell you that. Why is any of that material if you're looking at 1 minute bars? It's not material. It's probably among the most random data that you could possibly look at. Now, granted, there may be short-term traders who have extensive training in that space, who also have an enormous feel that they would feel differently about what I'm saying. But if I'm speaking mostly to folks who are untrained, right? So it's a different audience, different segment. So I don't know what to tell you as far as like looking at the screen every day. I think it gives you, because of the real-time data and the fact that you can enter your own orders, it gives you the illusion that you have power. And I, even at this age, I never think I have any power. All I can do is put in my orders and then adjust my stops accordingly. Like I can't overthink things or infer that I know things, even though I do have a pretty good feel. I don't know. In yesterday's example, we talked about a stock that we bought at 20. We had a $19 stop, and we talked about what happens when it gets to 3x. Why don't you just take your profits? It's because even at 3x, at 23, I have no predictive value, right, from that data that can help me know with great levels of certainty that it's going to go back to 20 or it's going to go to 30. So all I can do is control the controllables, which we spoke about last week, and adjust my protective stops. Because somewhere in there, people were like, well, I need 3-to-1. Personally, I prefer 5-to-1. But at the end of the day, the market's going to go where the market's going to go. All I can do is control the controllables, which is put in my protective stops. And I don't call them stop losses, because if I'm at 25 and I get stopped at 24, how's that a stop loss? Right? I'm still making money. So I think, not to be a stickler, again, words have meaning, words have power. I'd like to just say protect my capital at all costs. So whether I buy it at 20 and my stop is at 19, I'm protecting my capital. If it goes 23, 24, 25, and I have a $1 stop below the market, it's not a stop loss to me. It's a protective stop. I'm protecting my capital. Your job is to play superior defense and always protect your capital, whether you're in a winning streak or a losing streak. So watching the screen is inducing you to do something that's not in your best interest. Another thing you might consider looking at, and I can't really infer a lot of what you're going through because there's not enough here in the comment, right, is, are you getting too excited about small gains? I didn't, because I knew that I needed to really grow my account, and pulling down a couple $100 on $5,000 account wasn't going to move the needle. And that was when minimum wage was $2-3. Now it's 15. So if you think that you're taking down $100 to $150 on one of these $2 micro indices, and that's a good day, well, that's great, because that's just a one work day. You've just made one day's wage. Which I guess it's better to work from home and be a trader in that regard than it is to go to a job. It's just that you can't really change your account. You can't change your life, right? I wanted life-changing results, not just financial gain. That's where I got the emotional payoff for me, was that I was making life-changing gains, not these Pisher kind of numbers. Which, again, look, if you're in a situation where you're making small gains and you know that you've done that for the past year, now you might be able to scale. But your scaling should always be based on what is your R, what's your risk unit, what percentage of your account, right? So figuratively speaking, like you only want to double your account or double your trading size when you've doubled your account. Everything else being equal, right? You have an inverse relationship between position size and volatility, right? So you know that. But you're not going to go from trading 5s to 10s, right, if you're risking that same percentage of your account. 1, 2, 3 months of successful trading is not enough time to know that you're onto something. Why? Well, because you don't know that the market's activity is just in a short-term window where it's amenable. You haven't seen enough market cycles to really know whether you have skill or not yet. So one thing you can do when you start making money, or if you put your trade on, like in yesterday's example at 20, you immediately, as soon as you have the risk, put in your protective stop at 19. I want you to get used to turning off the screen or walking away and see how that feels. Like, what the hell you think's going to happen? You think that the broker-dealer, FCM, isn't going to execute your order? Be mindful of when the market closes for sure, right? Because every market has different opening bell and closing session. But as long as you have your protective stop in, you're still risking that $1 whether you're watching it or not. Set your alert for 21. Boom, the alert goes off. You're at 21. You cancel and replace. Change your protective stop from 19 to 20. Let it go. There's really no other way to do it. You can't be watching your P&L and using that as a data point to make trading decisions. The price is what's supposed to give you literally the indicator. The price is the indicator. There's nothing else. There's no fucking MACD. All that stuff is there to make you feel good. They're little, like I said in the book, what did I call them? Emotional Band-Aids. Looking at your P&L, if you're starting out, you have less than 5 years of experience, is probably the worst thing that you can do. The best thing you can do is look at the price, set your alerts, then adjust your stops accordingly, and let your winners run. Then you can do that every 50 cents, every dollar, whatever it might be for you. And that's how you're going to make money that's going to change your life. If you just want it for the action, then please tell me to shut up. Do what you're doing. You're doing it perfectly. There's nothing to change. But for me, when I was starting, I knew when I was getting into white-collar work for the first time, I guess wearing a tuxedo as a waiter is white-collar work, but it's still blue-collar despair. Trust me. I wanted to trade and make life-changing money. So I had to open myself to the possibility of that happening. And I had to imagine myself being in trades where that was possible. And that meant keeping them, because very rarely do you see these moves happen intraday where all of a sudden a takeover is announced, which, you can't create a trading strategy on that. I grant there's StatArb folks who kind of do all that stuff, but a lot of times they're sitting around waiting for the news despite, putting the trades on. You have to envision yourself making the big money and then, okay, well, what behavior do you have to exhibit? Right? Because this is where the big money's made. And this is where, on our institutional coaching, this is a lot of what we focus on is the mindset part. The trading tactics are easy. How hard is it to adjust the stop? As I've mentioned before, putting in an order to buy or sell anything is no different than filling in all the fields to send out an email. Not terribly challenging. The key is, what do you want out of the trades? And if you keep taking things at 3R, how are you going to ever know what it feels like to take a 5-hour or 10-hour winner? You see? So trust yourself to just adjust your stops. The market's going to go where it's going to go. And for me, emotionally, if I'm at 3X and I have my stop at 2X, emotionally, I'm fine with that. I'm still making money. If I'm at 4X and my stop is at 3X, I'm fine with that too, because I know the odds change. Probabilities change as the markets move, right? And so if you're not that inclined to adjust your math accordingly along the way because it's over your head, don't worry about it. All you can really do anyway is, knowing the math or not, is adjust your protective stops. and then leave those trades on. That to me is how you invite it, right? Because those are risks that are paying you money at that point. And you got to think if your asymmetric reward to risk profile for your setups is there, 5x winner pays for a lot of losers. If you're taking small gains at 1 or 2x, you're not going to make any money. And having an account at 5K being up, $400 or $500 at the end of the year, I guess that's better than losing it. But it's not going to move the needle enough for you in the short run to have any, think about it. When I started in the business, the total return on the S&P was 12%. So that would be, buy and hold would mean 5K is worth 5,600 at the end of the year. I knew I couldn't do anything with that 600, right, given what my bills were. So my goal was to grow my account in a level or to a level where passive income, right, money markets were paying, I think, like 5% at the time. So I kept thinking to myself, like, if I got completely burnt out and I could eventually take all my cash and just put it in the money market, how much money could I bring in from passive income to replace my having to go to work as a golf caddy waiting tables, right? So I knew the math, right? I had all those numbers. And I knew that I had to be pulling down or set targets of 10% meaning on my account equity. That's what I needed to make. To 10 to 20%, which, surprisingly, obviously you can do when the account is smaller, right? It's harder to do that when you have 10 million because there's really no reason to take on that risk when your account is smaller, and thank God I started when I did because I came to understand that as most trades are suboptimal, the best thing to do is to disqualify everything that you think is an opportunity. Remember this before we go today, that absent a trading plan, volatility does not equal opportunity, okay? Let that sink in. You need to have a plan. You need to know what you're going to do before you even do it. Otherwise, it makes no sense to even put the damn trade on. You have to envision the entire offensive drive. Opposing team kicks the ball off. It ends up in the end zone. There's a touchback. You get the ball on, what is it, 25? And now you have to think of what's the plan to get 75 yards down the field. You have to think the same way when you're putting on a trade. How are you going to handle the moving parts as the price changes over time so that you can stay in the trade for as long as possible? That's how the big money is made. It's not opening a position in the beginning of the day and then offsetting it at the end of the day. You're not giving the thing enough time to move. It might be a 1 or a 2% move in the actual instrument, but if the thing is going to start a 10% campaign, there's no guarantee that you're going to have an opportunity to get back in, especially if you're newer, because the setup that you used to get into the trade in the first place might not ever show up again. Then the whole move can be underway and you're not participating, all because you were afraid. Anyway, I appreciate you all being here. Thanks, everybody, for the comments and the questions. Keep them coming. I'm happy to answer them and be hopefully of service to you. And I'll see you tomorrow.